Hi, this is Lara at Elliott Wave Stock Market with your weekly analysis for oil done on, just after Tuesday 21st of May has ended. I'm recording this video just after midnight. Wednesday the 22nd has just begun. I'm changing my wave count at the daily chart level. This piece of upwards movement here and this piece of upwards movement, although my daily wave count was not invalidated, it's looking really unlikely. I think what's more likely is we don't have an end to a second wave correction at minor degree, and it's continuing sideways and higher as a double zigzag. Minor wave 1 ends here. This is where the second wave correction begins. We have a 5-3-5 zigzag, the first one of the double, labelled minute wave W. The first and second zigzags are joined by a 3 in the opposite direction. We have a 5-3-5 zigzag down, labelled minute wave X. And this is where the second zigzag in the double may have begun, with a 5-3 and a 5 up to complete. At 99.25, minuet wave C would reach 0.618, the length of minuet wave A, and minor wave 2 in its entirety may not move beyond the start of minor wave 1 above 100.43. Draw a parallel channel around this upward zigzag from the start of A to the end of B with a parallel copy on the high of A. We need to see very clear, strong downwards movement, 1 or 2 daily candles fully below this trend channel and not touching the lower trend line would provide a clear breach. And if we see that with clear downwards movement, then we can expect that a second wave correction is complete and a third wave down has begun. I'm going to have a quick look at the monthly wave count at the end of this analysis, and there I'll show where minor wave 2 maybe have begun and ending. Let's have a look at the structure for minuet wave C on the hourly chart from its start down here, this point down here. From this low to this high, we have a cursory count of 1, 2, 3, 4, 5, 6, 7, 8, 9. Theoretically, minuet wave C could have been over here, but I've had a look at all the different possibilities for an impulse or a diagonal. It doesn't look like a diagonal from here to here. I've looked at all the possibilities for an impulse with an extended first or third or fifth wave, and nothing fits. So this is an incomplete structure. The only thing I can be reasonably confident of today for oil is I think we're going to see a new high probably above this point before we see a trend change. So within minuet wave C beginning here, we have 1, 2, 3, 4, where 3 is just 3 cents longer than equality with 1, so 3 is not the shortest and they have a really good relationship of equality. This is where 5's begun, probably as an ending expanding diagonal with 1, 2, 3, 4, and the fifth wave is likely to be at least $2.34 in length. In order to be longer than the third wave, it's probably going to be a bit longer than $2.34. I don't have too much confidence in this target. I think it may be a bit optimistic. We may not get that high, but I don't think we're going to see a Fibonacci ratio between sub-minuet wave 5 and either 3 or 1, because there's already such a close relationship of equality between 1 and 3. So calculating the target between the next degree up, minuet degree, is the best that we can do at this stage. The upper edge of this trend channel for the diagonal may be a more reliable way to see where price is going to find resistance. If it got up there, I would expect it to find resistance at the 1-3 trend line, but more likely the upwards movement should fall short of this 1-3 trend line. That would be typical of a diagonal. When you see clear, strong downwards movement below this channel, which is a copy of the one on the daily chart, then expect that minor wave 2 is probably over, and the next wave down, a third wave within a third of a third, should have just begun. At the daily chart level, alternatively, this was my main wave count last week. I have less confidence in it, although it does remain valid. If minor wave 2 was a single zigzag, it would have been over here. Minor wave 3 may have begun with a leading expanding diagonal, where 1, 2, 3 and 4 nearly complete. Still needs a bit more upwards movement because this is not a complete 5-wave structure. So for this alternate as well, I'd still be expecting one final upwards move, probably to make a new high above this point here. For this alternate though, within a diagonal the fourth wave should overlap first wave price territory, but it can't move beyond the end of the second wave. This alternate is invalidated with movement above 97.73, and I would expect that we're probably going to see this alternate invalidated in another day or two. It's very likely that price will make a new high above this point here. For this alternate, if price does not move above 97.73 and we see a clear channel breach indicating a trend change, then we must see movement below 85.64, that's this low here, because for a leading diagonal the fifth wave may not be truncated. Let's have a quick look at the monthly chart on motive wave. This is my main wave count and there's a couple of reasons for it. This downwards movement here subdivides very nicely as a 5-wave impulse. I would not want to see this as a 3. So if we have the end of an upwards 5-wave impulse at the all-time high here for oil, this downwards movement cannot be the entire correction, it can only be the wave A of the correction. This upwards movement here subdivides beautifully as a 3-wave structure, and I wouldn't want to try and see this as a 5, I think that would be stretching it. So this is probably wave B of the correction, and probably where the C wave has begun, with a series of overlapping first and second waves, and in here we'd have minor wave 1 complete just here, and minor wave 2 either complete here or still continuing further sideways. So for this main wave count the subdivisions fit perfectly, which is why it's my main wave count. This downwards movement here subdivides best as a 5-wave impulse, as does this downwards movement. If we see movement below 77.29, the third wave would have then moved beyond the end of the first and this wave count would be confirmed. Now I've had a couple of people ask me why am I not seeing a triangle here. I'll explain why. Now this is possible. Now I've had people suggest that this could be A, B, C for a triangle. No, that doesn't work, because A subdivides into a 3-wave structure. When that happens, B should be at least 90% the length of A, because you've got a flat unfolding, and this possible triangle very clearly is not 90% the length of this upwards movement. The other possibility is if we have cycle wave B incomplete, that we have a WXY, but this has a pretty low probability. It's a bit odd, well it's a bit unusual to see a triangle in an X-wave position, more commonly B waves or fourth waves. A little bit less usual to see it in an X-wave position, but entirely possible. The biggest problem I have with this is the subdivisions here and here, both what I've labelled here A and C within this possible triangle, subdivide best on the daily chart as 5-wave impulses. Within a triangle, 4 of the 5 subwaves must be zigzags or multiple zigzags, which means only 1 of the 5 subwaves can subdivide as an impulse, and here you really have got 2, so the subdivisions just don't fit. So that's why I have my main wave count at the monthly chart level. I expect, and it's very, very common to see a series of overlapping first and second waves, which often trick you into thinking you're seeing a triangle, and then price moves out strongly in a third wave in the opposite direction to what you were expecting. I'm expecting we're probably going to see another 1 or 2 days of upwards movement for oil, maybe up to 99.25, maybe not that high, I think that's a bit optimistic, and then we should see a trend change in downwards movement. Use that channel on the daily chart to indicate when we've seen that trend change. It should happen over the next week. That's all for me today with your oil analysis, and I hope that everybody had a really great week.